Happy Tuesday out there, Team 42. It's your skipper here, Darius to present our macro minute for Tuesday, October 8th, 2024. As always, we'll start with our executive summary from today's leadoff morning note. If you would like to review the analysis supporting these conclusions, as well as what specific changes you need to make in your portfolio to remain on the right side of market risk, you need to be a client of 42 Macro. So today's key macro questions are, will China's recent stimulus efforts disappoint investors? Our answers are, in China's return from its Golden Week holiday, Zhang Shangji, chairman of the National Development and Reform Commission, merely reiterated previously announced plans for stimulus, a disappointing outcome for global investors. We maintain our view that China is headed for a balance sheet recession, so it's likely that the $500+ billion in stimulus recently announced will prove ineffective at generating more than a transitory bounce in Chinese growth. Thus, investors should expect the current spate of measures to be supplemented in the coming months. Inclusive of today's big sell-off, which our crowding model accurately presaged last week, Chinese stocks have rallied 21% since our discretionary risk management overlay, aka Dr. Mo, pivoted 42 Macro clients to a long max position on September 17th. We do not find it prudent to exit the trade just yet. Transitioning to our 42 Macro dashboard, as always, we'll wrap up with the question from our community. This one's regarding our Jay wants a soft landing theme. The question reads, when you say Jay wants a soft landing, what do you mean by Jay wants a soft? Does that mean no recession? Does Jay seem to care about landing the inflation durably at 2%? So our answers to that are yes, we mean that he wants to avoid a recession, and no, he does not care about landing the inflation plane durably at 2%. I think the average investor is not paying attention to the global sea change that is occurring with monetary policy, which began, in our opinion, back with the UK gilt crisis in September of 2022. The Fed has recently joined. The Fed has been the most recent central bank to join the sort of global sea change in preserving financial stability, aka crowded financially repressing investors into their sovereign debt markets above price stability and above even their own economic mandates. Obviously, the Fed has a maximum employment mandate as well. So we continue to observe evidence all around the world of this phenomenon. We have the ECB cutting their interest rates with inflation well above target. We have the Fed slashing rates by 50 basis points and slowing the pace of AQT with inflation well above target. We have the Bank of Japan with inflation running well above target for multiple years, for the first time in 20, 30 years. Sort of got spooked and stopped dead in its tracks with respect to its policy normalization drive. And so now it's our view that we are in a new world order with respect to global central banks' response to financial market conditions and economic developments, with obviously financial stability being sacrosanct with respect to their policy reaction function. So investors need to be aware of that. This has been part and parcel to our Jay wants a soft landing theme. This has been the core of our Jay wants a soft landing theme, which is the Fed will prioritize the economic stability over price stability, and ultimately the Fed's recently decided to prioritize financial stability even over that. So in our opinion, that's structurally bullish for risk assets, like stocks, credit, crypto, and commodities. That's structurally bearish for defensive assets like treasury bonds and the US dollar. This is something we've been talking about again since the beginning of November of last year. And so no change to that view. We're just reiterating that view this morning as the data continues to support it. So we'll wrap it up there. Darius presenting our macro minute for Tuesday, October 8th, 2024. Everyone have a wonderful day out there. Best of luck. We'll catch you back here tomorrow. Cheers.